What happens if you invest $10 a day for 10 years? It's a question that might seem simple on the surface, but the answer could genuinely change your life. Let's explore what this modest daily commitment could mean for your financial future. Imagine starting today. $10 might not feel like much. You probably spend that much on coffee or a quick lunch without thinking twice. But when you commit to investing $10 every single day, something remarkable begins to happen. Over the course of a single year, you'll have invested $3,650. That's the power of consistency, and it's just the beginning. Now let's talk about what happens when you let that money grow. If you invest $10 daily into a diversified portfolio, you're not just saving money. You're putting your money to work. The stock market has historically returned about 10% annually over long periods. That's not guaranteed, but it's a reasonable expectation based on decades of data. In year one, your $3,650 grows. With compound interest, you'll earn roughly $365 in returns. That means your investment account now holds about $4,000. You started the year with nothing, and through consistency and the power of growth, you've built something real. Year two is when things get interesting. You're still investing $10 daily, another $3,650. But now you have two factors working in your favor. You have your contributions, and you have your previous earnings earning returns themselves. This is compound interest in action. Your account is now worth more than $8,000. The growth is accelerating. By year three, your total account value exceeds $12,000. You've only personally contributed about $11,000 so far, but the market growth is already contributing over $1,000. The compounding effect is becoming visible. Year four brings your account past $16,000. Year five pushes it beyond $20,000. At this point, you've invested $50,000 over 5 years. Your account is now worth over $20,000 in pure market gains. That's real money that you didn't have to earn through your job. By year seven, your account exceeds $30,000. Year eight brings it past $35,000. The compounding is accelerating dramatically now. Year nine pushes your total past $40,000. And finally, by year 10, your account is worth approximately $55,000. Let's pause and really absorb what just happened. You invested just $10 every single day. You invested a total of $36,500 of your own money over a decade. But your account is now worth $55,000. That's nearly $18,000 in pure investment gains. You made money while you slept. You made money while you worked. You made money while you lived your life. This is the magic of long-term investing. But there's more to this story than just the numbers. When you invest $10 daily, you're training yourself in discipline and patience. You're learning to delay gratification. You're teaching your brain that small, consistent actions compound into something significant. If you can commit to $10 a day, you can commit to walking for 30 minutes daily. You can commit to reading for 20 minutes before bed. You can commit to learning a new skill. The habit itself becomes more valuable than the initial result. There's also the psychological benefit of watching your progress. Every time you open your investing app and see your account growing, you get a hit of motivation. You see tangible proof that your actions matter. You see that you're building something for your future self. This becomes addictive in the healthiest way possible. Now, let's be honest about some realities. 10% annual returns are not guaranteed. Some years the market will be down, some years it will be up, but over long periods it has historically averaged that return. If your returns were only 5% annually, your account would still be worth around $48,000. If they were 15%, you'd be approaching $70,000. The exact number matters less than the principle. Consistency and time are your greatest allies. There's also the matter of starting young versus starting later. If you're 25 years old and you invest $10 daily until you're 35, you'll have built substantial wealth in a decade. But if you then stop investing, that money continues to grow through compound interest. By the time you're 65, that 1 decade of investment could be worth over $500,000. The early years matter most because they have the most time to compound. This is why financial advisors always emphasize starting early. Even if you think you can't afford it, $10 a day is often possible. It's one coffee. It's the cost of a casual meal. It's a fraction of most people's daily spending. But it requires a shift in perspective. You need to see that $10 not as a loss today, but as an investment in yourself tomorrow. Some people worry about market crashes. What if you started investing in 2007, right before the financial crisis? Well, you would have watched your account dip. But if you continued investing $10 daily through the crash, you would have been buying stocks when they were on sale. By the time the market recovered, you would have been ahead. Time heals all market wounds. This is why long-term investing works. The crashes are temporary. The recovery is inevitable. Your daily investing means you buy more shares when prices are low and fewer when they're high. This is the beauty of dollar-cost averaging. Now, let's think about this in the context of your life 10 years from now. You'll be 10 years older. That's happening whether you invest or not. You'll have spent some money on things you probably won't remember, but you could also have an extra $50,000 in your account. You could have options. You could take a sabbatical. You could launch a business. You could help a family member in need. You could retire earlier than you thought possible. Money is ultimately about options and freedom. When you have more of it, you have more choices. When you have no savings, life controls you. When you have savings, you control your life. Investing $10 daily is a declaration of independence.